Hey everybody, I'm David with Bolivar Live, and it's Insurance Talk with Priest Insurance. We've got our panel here with us today, but I think Dan's going to take this one over. As you know, 99% of the time we don't know what we're going to talk about until he gets here. And today it was sort of like that. We did a show on Jamie and what she does and insurance market. This one's yours, Dan.
Oh, okay. So we can talk about that. To begin with, this is Jamie. She's been with me for 12 years, going on 30. And
I was going to say, feels like 30, doesn't it?
Sometimes, yeah.
It's been a long time. And so some of the times you call into the office, and if you don't catch me, you catch Jamie, and her voice is, she's very experienced in coastal insurance and in general insurance, commercial insurance. She is our commercial underwriter as well. So you have a nice introduction to who she is today. So today we're going to talk a little bit, let's talk about just the insurance markets and what's really been happening.
What hasn't happened is more the question, maybe.
It's been sort of a perfect storm in insurance. So why is my rate going up? Everybody's heard that. And we can get into a litany of discussion about what has happened, but a reality is, and I was showing you a piece of paper earlier, and it was
I paid attention to that paper, let me tell you. I read the whole thing.
In 2023, there's this thing called combined ratios in insurance companies. And I'm talking about wind and fire and all of it combined.
Mm-hmm.
And so a combined ratio is the amount of money, there's two ratios, the amount of money an insurance company takes in versus expenses, the operating expenses of the company, and that's called the expense ratio. And then there's the amount of money the insurance company pays in and the amount of money it pays out for losses, such as a hurricane, a hailstorm, a fire, any of that. When you take that ratio and add it to the expense ratio, that's the combined ratio. And it's expressed in a term of 1. So if the combined ratio is over 1, that means the insurance companies are paying out more than they're receiving. And
they're in the red.
Yeah, they're in the red. And nobody likes insurance companies to speak of, but they are in a business. And so over last year, the industry-wide combined ratio was sitting at about 103. So as an industry, it was paying out about 3 cents more than every dollar we're taking in, and that leaves nothing for profit, right? And that has been a trend that in some carriers, I see that as high as 126%. Some carriers are still down below that number, but as an industry, they're facing that loss ratio problem, which affects things like reinsurance, which is insurance companies for insurance companies.
Right.
So they pay what the insurance companies don't have. It's insurance for that. So the good news is, if you can call it good news, is that this year, I think we've been seeing some stabilization in those markets. Doesn't mean that the profits are going to be to the point where there's going to be these huge rate decreases, but maybe we can stabilize these rates. And I know that some people that are listening have probably experienced 30 and 40% rate increases over the past couple of years.
And we've got the TWIA saga going on too, that, they're talking about the rate increases.
Yeah, so there's a TWIA problem that they have an automatic building increase every year, which it brings the building cost up. Well, they're also looking at a pure rate increase. So while they haven't had a rate increase in a number of years, I think 3 or 4, that's on the table right now. And whether that passes or not, that's a different thing. But we've had Burl, and their reserves they're down.
Right.
And that's a not-for-profit agency, right? They're not out there to turn a profit. They're actually
they just want to cover expenses.
They're covering expenses. So, is that rate adequate? I don't know. If they'd had what's happened in Florida with Helene and now what's the name? Milton. That would be a really, really big problem. So rates are an issue. We kind of combat that by, taking a look at coverages and what we can do. We just make sure that people are in the best spot they can be, and we're always on a constant look for that. So hopefully this next year or two, the property markets will stabilize. Hopefully auto rates will stabilize, and
we can get back to normal.
Well, whatever the new normal is.
That's right.
Rate increases are common. Let's keep them at 2 or 3% a year.
We haven't seen a normal since the pandemic, it seems like.
We have not.
Well, we do this show every Monday at 4 o'clock. We've been blessed with Smiley in here with us for the last couple weeks, and we'll try and get a few more of their office staff in and let you know who they are and what they do for Priest Insurance. I think the more more you know about the office staff because of the length of time they're there, the more comfortable you'll feel talking with them and letting them really help you on your insurance. Because nowadays it's not just about shopping, it's making sure you have the coverage that you need in case there is a disaster in your area. So we're going to head on out. Y'all, thanks for joining us today. Until next time, I'm David with Bolivar Live. Y'all have a great day, great week. Come see us. God bless, and bye-bye.